On March 11th, 2020, when the World Health Organization declared that we were in a pandemic, the economy fell sharply into a recession. It was a very short recession of only 2 months as the money printing began and the free supports began to flow. If you throw enough money at an economic decline, it will turn around. However, there will be a future bill that may be worse than the initial problem it fixed. That cure ended a short recession and put us on the road towards a potentially bigger recession. Today, we will look at where that road is now, where it is going, and we will begin right now. It should come as no surprise that when you create new money, it will absolutely dilute the buying power of the money already in circulation. This can be a driving force of inflation. Obviously, there was a need for support as people were locked down due to the pandemic, but there was not a need for blanket supports. In Canada, Trudeau argued that they needed to get the support out fast as people really needed it and were hurting. That is a fact that was absolutely true. However, opponents reasoned that a little pain could have ensured the supports were catered towards people who really needed them instead of a blanket support. That could have saved on some of the money printing. Why exactly is that a big deal? It is not just the money created in the pandemic, which, by the way, was roughly $307 billion in Canada, but it has to do with what happens to that money as it enters the banks and something we call fractional reserve banking. The banks hold on to 10%, so $37 billion in their reserves, and then they loan out $333 billion, effectively adding even more to the money in that system. And if you think about it, even that $333 billion that's loaned out will then re-enter the bank and the whole process happens all over. So a significant amount of money is actually created within the economy. All of this support money flooded the market, and it created a booming economy, record stock market highs, and of course a crypto explosion. The good times were rolling, though eventually we would invariably get caught under the wheel of those rolling good times. Rising inflation was going to come, and yet, as we moved through 2021, it was downplayed quite a bit. In the US, their message was that in addition to the base amount from the money printing, it was also just a side effect of pent-up demand and some supply chain issues that we were beginning to really take notice of. It, of course, was transitory and it would pass. They were 100% right. Well, on the supply chain part at least. Of course, as we moved into 2022, the idea that it was transitory completely went out the window, and the scope of that problem was beginning to take shape. The Fed in the US and the Bank of Canada up here began to entertain the idea that we were going to need rate hikes to get things under control. In fact, they were already talking about getting aggressive with those hikes. We all could see that was exactly where it was going to go. Unfortunately, in the United States, they had no idea that their first quarter real GDP was in the red. In fact, according to an updated statistic from the U.S. Department of Commerce, they experienced a negative 1.6% decrease in real GDP. That's pretty bad. Now, the second quarter has just come to an end, and we are waiting on those estimates. Many economists are actually believing that they will indeed be negative. With second quarter estimates not that far away, and many economists now believing they will also be negative, that road to a recession may have already reached the recession in the US. Powell has already admitted that a soft landing is looking even more unlikely. In Canada, we fared a little better. We had a 0.8% growth in our real GDP in the first quarter, and it is looking that we may just scrape by on the positive side for the second quarter. Technically, that would mean we are still on the road to recession in Canada. However, the 2 straight months of negative real GDP is not an absolute, and we can still have a recession declared in Canada without that qualification. One thing to keep in mind, when the US is in a recession, historically Canada also enters that same recession. It may be a little bit later, which is what it appears to be this time, but it'll be interesting to see how that's going to play out. Before I drop my opinion on all of this, if you are new to the channel, or one of those folks who watches all the time but hasn't subscribed, yes, I am talking to you, Jennifer, please click on the subscribe button. It's free and it helps me bring the content to you. So what is this mess we're in and how do we get out of it? First off, inflation is not going to drop significantly anytime in the near term. The rate hikes are all about lowering demand, and that will lower the demand portion of inflation. However, the supply chain issues caused by the pandemic, The war in Ukraine and the labor shortages are, in my opinion, the biggest driver of inflation right now, and we are doing nothing about any of that. If gas and food keeps rising, inflation is going to be the way for a while. People will need to get by with less money and higher prices. I hate to say this, but this will drive the recession, and things may remain dire for years. I don't think we will see another Great Depression, but we could see a significant recession come out of this. It will be worse for a while before the blue skies return. Keep in mind, a recession is a normal part of the economic cycle, so good times always do return eventually. If we really want to beat this, we need to address the labor shortages and the supply chain issues that we have control over. We do not have the ability to stop the war. If Ukraine and Russia will not be contributing to the supply chain for a while, we do need to make alternative options. Does that come in the form of more farmland growing wheat and more oil wells in the West? Maybe. Will environmentalists be a little peeved at that solution? Yeah, probably. If we put all of the politics aside, what does this mean for investing? The first thing it does say is that as inflation eats money and the rate hikes shrink the total money supply, there is less money in the market, and getting back to those all-time highs may be unreasonable expectations. The market drops are not just a bear market, but also a correction from the overvalued prices of many stocks. We will eventually get back to higher prices, but for now, we need to redefine our normal prices for a lot of our assets. If you bought high, you need to be prepared to hold long term. Otherwise, you are realizing losses. This is where the psychology of investors is tested. This is where you rise to become a great investor, or you crumble under the pressure and watch your dreams fade on a shelf you can no longer reach. The good news is that the only difference between those two scenarios is that the great investor understands the red market, buys their high conviction stocks, and waits for those blue skies to return. The not so great investor lives in fear, uncertainty, and doubt until they can't take it anymore, and well, yeah, they realize some terrible losses. If that is you, and if you realized those losses, learn from that mistake. You may be down and out, but every phoenix rises again from the ashes and someday soars. We have a fantastic community here, and that community will help you. And that, my friend, is more than something. In the words of the 80s prophet Howard Jones, things can only get better. Be sure to be back here on Sunday afternoons at 4 p.m. Eastern for the live version of This Week, where we can break down the news and I can have the opportunity to interact with you all. Until then, may all your news be the best news, and I will see you in the news. Take care.